Wonderful good morning and good afternoon here from Germany. I'm really happy. I'm Markus from Know-How Trading, and I'm really glad to join this great event here from David and Time Researchers, and I'm really thankful and grateful for that. So today we want to talk in my session about the one and only and pure trend following. I'm a trend follower since 25 years, and I'm one of the followers of the trend followers in the 80s from Richard Dennis and Bill Eckert, as you know, maybe really well known, especially in USA, the trend followers. And I do exactly the same like this, just in a little bit in a modern style. And I want to show you what's the important part about trend following. There is, I call it the holy trinity of trading. So there is the godfather of money management, the godson of trade management, and the holy spirit of the rules. So this is what we want to talk about in my session today. And of course, we dive really deep into the practice. And I want to show you many, many trades we do every day in my Know-How family, because we trade in different time frames, especially in day trading, and but also in higher time frames, 4 hourly charts, 6 hour H6 and 12 hours and daily chart, of course, and even day trading. But you will see today how trend following is really working, and I can prove it with numbers because we evaluate everything. Every trade will be documented, and you will see it about the numbers because the numbers tell always the truth about trading. So, but before we start, it's always the risk disclosure. You are responsible for your own trading. We just do education only. So, what I want to show you before we come to the charts, it's very, very interesting that most of the people lose money and they will never come back. So you see in this slide, there is a slip, and I want to explain this, what this means. So for example, if you, let me do this, if you lose 1%, and as you know, many people, when you hear, when you watch YouTube videos or Facebook or something, and especially newcomers always tend to ask, how much is the risk? How much risk I should take with every trade? And most of traders and most of, yeah, speakers tell you, yeah, 1% or 2%. Let me tell you one thing. I do trading for living for 25 years now. This is the biggest, sorry, this word, bullshit I ever heard. Because my beginning, at the beginning of my trading career, people told me the same, 1 or 2%. In the meantime, and especially when my teachers taught me, I figured out it's the worst thing ever. As long as you don't know what to do, is 1% or higher the death of the account. Why is it? Look, if you risk 1%, it's simple. Then you need just 1% to come back to zero. But the higher you lose, and it starts at 10%, then you need 11% to come back to zero. No profits, 10%. So, and as you know from your own trading, and I'm quite sure you exactly know that, it's very, very easy to lose 10 trades in a row or 10 trades a day. It's really simple. 1 minute chart, 5 minute charts. It's simple to lose 10%. And if you do it on any prop trading challenges, for example, you're out, then you start from the beginning. And in your private accounts, that's the big danger, because if you lose 10%, you try to bring it back very quick. So that means you raise up your account, your risk. And at the end, it's going to be more worse, because if you lose 40%, just 40%, and you know it's simple to lose 40%, you need 67% to come back to zero, just to come back to zero, no profits, just to come back. So, and if you lost 50% of your account size, you have to double your account, and you need 100% to come back to zero. So, and that's the big problem in trading, why people are completely wrong when they tell newcomers and beginners you should risk 1%. As long as you don't know what to do, as long as you don't control your emotions in trading, you will destroy your account with this stupid idea of 1%. It's not possible. Later, if you're an experienced trader, that's a different thing. For example, I do trading for 25 years. Yes, I can trade. I can trade with 1%, but I know what I have to do. So, and I don't make any mistakes, and I have my rules. But even me, I tend to trade with 0.2% or 3 or 5, sometimes, yes, with 1%. But this you should keep in mind when you start with trading. Instead of finding the holy grail of any strategy, you should think about in the first place about your money management. Because in this trinity of trading, money management is the godfather of trading. There's It's a cool thing if you have cool rules or a strategy. By the way, the strategy is given in trading by buy cheap and sell expensive, or vice versa. Um, but you can have a cool trade management. But if you cannot control your money management, you will lose on the long run. And I made this experience many times in the past. When when you lost 50% of your account, you raise up your risk as much as possible because you need to come back, and then you double, and then you go all in, especially if you have small accounts of 500 or $1,000 or $5,000, and you know it's simple to lose 50% of such accounts. And if you don't know what to do, it's the worst thing ever to work with such a high risk. This is what I want that you keep in mind, why we work with a smaller money management. Determining the optimal risk per trade means you need to know how far you can go into the loss. And it should be as that small as you need a smart time to come back. So if you see in this slip again, as long as you remain between 1 and 5 or 6%, everything is fine. You can come back. But the moment you lose more than 10%, you need a higher number just to come back to zero. And then the worst thing starts. So most of traders, the average of traders around the world, by the way, not only in USA or not only in Germany, by the way, the average account size is anywhere between $5,000 and $10,000. So as you know, people have the dream to make trading for a living, to become rich very soon. And this is not possible. With such amounts, it is not possible. And I'm quite sure you made this experience by your own in the meantime. So what does it mean? It's always the better thing not to invest your own money. We are living in 21st century right now, and we have the big chance, especially also in USA, that you could use this kind of prop trading companies. They give you amounts of 100,000 or 50K or 100K or 1 million account, and you can master some challenges and assessment before you get real money. This is a way how to make money in trading. Okay, if you have your own money, like maybe you get some retired money from your grandma passed away or something like that. I read something from a young guy on Reddit in USA. He got some money from his grandma when she passed away, and he got 18 years a student of the university, and he got right about $800,000 from his grandma, and he saved 100K, and 700K he was investing in Intel share. He had no clue about anything about trading, and he were investing 700K in Intel at a price when Intel was at $30. Do you know where Intel is right now? 19. So how will this guy come back? Never, ever in this life. It's almost impossible to do so. So therefore, you need to control your money management. So at the best, you stay within round about 3% or round about 6%. So what is the optimal risk per trade right now? If you want to remain in this borders between 3 and 6%, so which means you are always able to come back in a reasonable time with your trading. That means we risk not more than 0.2%. That means you need 15 losing trades in a row to risk 3%. And you need 30 losing trades in a row to risk 6%. So to be honest, if you lose 15 times in a row, there are two reasons for that. There are two causes. First, you have no clue what you're doing there, or you trade in an emotional way. So, and if you lose 30 trades in a row, then please, in God's sake, stop trading and do something else. Go hiking or bowling or have whatever you do, but stop in God's sake with trading because you waste your money and your lifetime. And if you don't understand that you need a teacher for trading and that you need some cool guys like David and all the other teachers today, and you think you can teach yourself in trading, then you're completely wrong. You will fail. It's not the problem to teach yourself about the technique. Like in the webinars today, you listen to many teachers today in this big event from David. And you can teach yourself about strategies or approaches, something like that. But when it comes to the right edge of the chart, where you should close the gap between knowing and doing, this is the one part you cannot teach yourself how to control your emotions, especially, and I know, I know it, you know it, David know it, everybody knows, when it comes to real trading, it's so hard to control the emotions, especially you lost 1, 2, 3, 4, 5 times in a row. After 3 times of losing trades in a row, it's really hard to take the next signal without control or with controlling and with a controlled money management, a real conservative risk management. So, and this is what you need to understand when it comes to trading. And if you need a profit target of 10%, for example, yeah, how will you do this? If you lose 10 times in a row, then you need 11 times. If you work with 1%, 11 times, you need 11 trades in a row just to come back to zero. And then you need another 10 times to reach any kind of target when we talk about prop trading, for example. If you do it on your account, in God's sake, don't do it. Yeah, don't do it. And if you do this in that way, I promise you, you will not become successful in trading. So the first thing is that you have a really optimal risk per trade. Once you know what you do, and once you have many years of experience, yeah, then it's okay to raise up your risk. Maybe that's okay. But first of all, you need rules. The strategy again in trading is given, ladies and gentlemen. Buy cheap and sell expensive. It doesn't matter if you trade with a share, with currencies, or with bonds, or with indices, or whatever there is. You only can make money as a trader when you buy cheap and sell expensive. Or in our modern times, we can work vice versa, sell expensive and buy back cheap. But when I explain it, it's always easier. That's a strategy, ladies and gentlemen. You don't need to find another strategy. When you hear online or something in webinars or whatever people talking about a strategy, then it's wrong. Think in a logical way, guys. I'm a logical trader. I'm the logical trader, very well known as a logical trader, because logic is the only way to control the emotions, because emotions are always caused by your thoughts. And even if you cannot control your thoughts, you are forced from yourself, from your brain, to act in an emotional way. This is neuroscience. So I had and have an education, still processing education in neuroscience is a part of the education. I give it to my students also, because if you don't understand how your physical brain is working, how will you control your emotions? It's not possible. Therefore, things like prefrontal cortex, yeah, or your neuro connections, or limbic system, or basal ganglia, something like that. If you don't know what's about that words, then I would highly recommend to stop trading immediately, right now. If you don't know how this is working, which is between your ears, stop trading, because you will lose on the long run. All profits are by chance. So the first thing is to find the optimal risk for your trading, and it's not 1%. It is not for a beginner. If David trade with 1%, or Anchor, or me, or one of the other teachers, we have years and years of experience. It's different. But if you are a beginner or a newbie in trading, or with a little bit less, or with a little experience, stop doing this. You will and you must lose on the long run. So trend following means this is what the turtle traders did in the 80s. And we do exactly the same, because it's the pure nature of trading. Everything starts in the order book. In the order book, you just have numbers, price, and volume. That's all. And they created the order book and the stocks, and the exchanges creates the new price based on the volume, and then trading is over. Then trading is done. The moment you see a new price in the chart, trading is done. No one cares what you do with the prices. How do you express that in the chart? With a like a normal chart, like candlestick, or with line charts, or like me, like in Heikin Ashi. No one cares. It has nothing to do with trading. Absolutely nothing to do with trading. Trading just consists of price and volume. That's all, over and out. The rest is your perception. The rest is what you want to see in the chart. So when we understand this, that trading in the beginning, if the absolute, I call it the big bang of trading, it's price, volume, numbers, no charts. There are no charts. Trading means only math, only numbers, price and volume, which means when the beginning is math, why we should continue with perception. Oh, I think this is a support. Or maybe this could be a resistance. Or maybe this could be a trend channel. Guys, we're talking about math. 2 plus 2 is 4. Always and every time on this planet Earth, in this universe. And especially when it comes to trading, you understand. We need to understand what that means, that we trade with math. So if you look at the chart and you think in the conjunctive, that you say, oh, maybe this could be, maybe this might be, or maybe the price should be. It's not working. You have to work with math, with logic, which means every approach should be based on math, on numbers. That's the most important part. This is what you see here in my slide. So when we see that the beginning of trading yeah, I come back to my charts right now. So that's the rules for the moment, that you know what we are doing when we now look for the chart. Always from the out of the correction, trading into with a trend. So here we go. And as you see here, I show you many charts here in the next minutes, that you know what we are doing here. And I can show you, for example, that's kind of numbers. Yeah, if you see the quote, it's always in 1 minute chart, for example, in different products, You see 61, 61, 56, 66, 70, 51, 65%. That's the hit quote in 1 minute chart. So, and you will see it here. And of course, I can see it here. I can see your proposals also, and I will do this also for you. So we see here, for example, what we are doing here. It's always a trend. And to show you this one, there was a winner this morning in Dow Jones. So the trend starts here with the move, the correction, and with this move. And we have clear rules. And I want to show you just quickly the rules. We need a valid trend, entry in the second trend arm, out of the correction, which means the correction has to run at least 38%. And then we are waiting for the rebound, and we use Heikinashi, a balance candle. So that's the rules, which means you always know what to do, how, when, where, and why. This is how trading is working. So as you could see, we were here in this part. I mark it here for you. That was my second trend arm. So, and there was the turnaround. There was my balance candle, as you can see here. So there was the entry. So, and in this approach, we have a clear target. We work with a ratio, win ratio of 1 and 1. Why we can work with 1 and 1? It's simple, because the hit quote is almost 70%, which means I don't need a risk reward ratio of 1 and 2. I just need 1 and 1, because the probability for my approach is around about 70%, which means I risk 0.2%, and my target is also 0.2%, for example. So if you have a 50K account, for example, then you risk $100, and your target is also $100. It's a simple, really simple system. I don't care about the product. It doesn't matter if this Dow Jones or something else. It's just I need products with a high liquidity and with good volatility. So as you see, that was a winner. We had the entry here roundabout. We have the entry here. The stop loss was below the last correction point, and the target was also at the same 0.3, 0.4, and we reached the target a couple of minutes later. Quickly, $100. It's a kind of simple system, really, really simple system. Then the rest, I don't care about the rest. The money, in the moment I had my money, I'm out. I'm looking for the next trading chance, next second trend arm, which was here. We start here again. As you can see here, the trend starts here. First move, first correction, second move, second correction. So rules. A valid trend, entry in the second trend arm, correction more than 38%, and then a balance candle. This, the black one here, is a balance candle, like Heikinashi balance candle, a body in the middle, shadows on the upper and lower side. So then the entry above, and as you can see, the risk to my last correction point where the trend must break was 0.2%. It's just price change, price distance. Has nothing to do with the risk. Risk is always 0.2%. On a 50K account, for example, it's $100. If you have another account, you can calculate it by yourself. So, which means I just need to know how far is the distance between my entry and my stop loss, because I have a risk reward ratio of 1 and 1. And that means 0.2, 0.10%, target 0.10%, and I reached it a couple of minutes later. Another $100. You see, it's a kind of simple system because it's trend following. The price and the volume always, what happens in the order book, always leads to a trend. That's the pure nature of trading. That's the reason why I don't care about any support resistance or any whatever there is. As you see my chart, there are no indicators, nothing, pure naked chart. The only thing is that I draw my trends. That's all. Movement, correction, movement, correction. And Heikin Ashi, it's really simple because when the color is changing, then you have a new high point and the correction starts. And then you have the high point, and when the price is going above the last point, then we see a trend continuation. So you see, it's the next money. So current situation right now here, for example, you see it's another uptrend here right now. Move, correction, move. So in a couple of minutes, in around about 5 minutes, we have the opening cash market in USA. So actually, you see, there is the correction. And that means, okay, look, there was my balance candle. And that means I can make a trade here. I calculate the distance to the stop loss, which is below my last 0.3 here. It's 0.14, so I know my target right now is also 0.14. I just need this distance to make my $100. And as you can see here, for example, in Dow Jones, where is it? Here is Dow Jones. We have an average a hit quote of 70%. Just in the last 1, 2, 3, 4 weeks. You see, if you cannot make money with the hit quote of 70%, then you should really choose another job. And also in some currencies, but Dow Jones is really, really stable and really, really stable when it comes to trend following. Just a sec. I have to do here my own trade. In the meantime, so why is it? Look, there was a 5-minute chart, an idea in Australian dollar, Canadian dollar. So what happens? So I show you here in this one. So you see there is another trend. That's 5 minutes. It's Australian dollar, Canadian dollar. So you see I made here, there was an uptrend. I made money here. There was the downtrend out of the correction in second trend arm. We reach a target. Always the same distance. Risk reward ratio is 1 and 1. So now we have another second trend arm. There we see the turnaround. There is my entry. And I set my pending order. So in here, I risk $100 to the stop loss, and my target is always $100. So you see, it's really, really simple in this trend following mathematical system. So Jamie is asking about, I think this is a stock. And let's see, EHC. Let's see. Jamie, I don't know which time frame you want to see, but let's start with the daily chart. And this is Encompass Health Corporation, I guess. This is the right one. That's the shortcut EHC. So where we are, actually, we are in trend arm number 8. Yeah, this is not a really young trade. I would never, as a trader, by the way, there's a difference between trading and investing. So investment needs, you have a time horizon of more than 10 years and more. Then you can buy almost every share. Because if you have a healthy share with a good basement, financial basement, then yeah, it's a cool thing of investment. But if you are a trader, as a trader, yeah, then you need to buy cheap and sell expensive. And EHC is quite not cheap at the moment because we are in trend arm number 8. We were cheap here last year in November. There was the entry. And you see, as a trend follower, just always follow the trend. Then you see that is your profit. If you come out of the correction in trend arm number 2, here we in the top, you had 43%. Right now, still, or at the last 0.3, which is here, is almost 26% during round about 7 or 8 months. But now it's trend arm number 8. It does not mean that the trend cannot continue. Every trend is always able to continue. Doesn't matter. But as a trader, you are way too late. Now it's trend arm number 8. So this is, I would not buy here because for me, the trend is way too old. So you were asking for SNEX, StoneX Group. Here we go. Also kind of old trend. Look, it's trend arm number 6. We are going to trend arm number 7. Yeah, maybe trend arm number 7 has a probability of around about 72%. And maybe it's maybe a buy chance here roundabout at $78 roundabout, and then continue maybe to speculate on continuing the trend. But basically, the fair price is at 64. EHC, the fair price was at 61. So you see, you're really expensive in that price. And the trader's job is buy cheap and sell expensive, not differently, not the opposite direction. So, and in Stone, here in the StoneX group, the fair price is $64 right now. We are 76. And if you can see that here, there is a downtrend also. So, and the correction ran already 50%. So it's a buying chance to continue the trend, but it's an old trend. But to be honest, I would more be on the seller side. There are the balance candles. The pink are the balance candle, which means sellers are higher with their volume than the buyers. Actually, I would set a pending order, stop sell on the way down, and we will see it which trend will continue, because we have two trends, an old uptrend and a very, very young downtrend. And you know, the highest probability is here in the second trend arm. So let's come back. Now the market opens and you see, bam, we reached the target. How cool is that? $100 again. We reached the target. There's another profit. Yeah, it's really, really simple. It's just trend arm, always trend arm number 2. It doesn't matter what happens next. Yeah, there was my entry. There was the the target. Done. I'm done for now. So now I'm waiting for the next trend in the next second trend arm. You can do this also with every chart. You can do this with shares also. If you have shares from the Dow Jones or S&P 500 in 1 minute chart, for example, during the day, it's really cool thing. So look at here in gold. Since this morning, we had 2 winners. This morning, today in Germany, by the way. In Germany, now it's 5:30. We are a little bit in front of you. So you see, it's always the same what I'm doing here. It's always the same. Look, the trend starts here, move, correction, move, correction, second correction, balance candle, entry, stop loss at the last correction point. That was 0.09 at my distance. I have the same as my target. Bam, reached the target. The possibility that we continue with the trend out of the correction is round about 70%, as you can see here. It's always just numbers. Remember, Dow Jones, for example, gold 51. We have higher time frames also. In gold, it's a little bit less because the higher the time frame, the less signals you get. Now, this is what you should keep in mind. But if you're day trading 1 minute chart, you can choose whatever you want. If you don't miss a signal in second trend arm, you always have a high probability, way higher than 50%. So the next signal came around a couple of hours later. Let's see where it was. Here we go. Here was the second one. It was a couple of hours later. There was the beginning. There we had the break of the down uptrend. Here we start from a new one. Move, correction, move, correction. Then the turnaround, change of color, entry, distance to my stop loss, 0.10%, distance to my target, 0.2%, 0.10%, reach the target, next profit. So in a couple of minutes before, there was the downtrend. Look, move, correction, move, second trend arm, turn around. The red one here, that was my signal candle, because rule number 4 means balance candle or change of color. And that means, okay, entry below, I calculate the distance to my stop loss. Then I know where is my target. Also 0.24. And here we go. There was 24. Bam. There was another profit. There was another profit. And this is in gold today in 1 minute chart, profit number 3, which means in a 50K account with 0.2% is $300, for example. If you have higher risk, for example, 1%, yeah, then it's 500, it's $15,500 just in gold with 3 trades with this simple strategy. I have to set my stop loss and my target. So I show you what I did here. So trend arm number 2, as you can see here, trend arm number 2, deepen the correction, change of color, entry, stop loss to my target. In that case, that's a smaller account, a $5,000 account, or what is it? Yeah, $5,000 account. So I risk around about $50, in this case 41, and my target also 41. So just simple 1-in-1 ratio, because my hit quote is 70%. So I believe in it and I trust in this strategy because I do this kind of trading for many, many years. This is why I trust. I know there are losses too, but losses are a part of the game because you don't have a guarantee. You just have probabilities, but you don't have a guarantee. So let's see about euro dollar, for example. Today, you see, today up to now we had 3 profits and we had 2 losses. So I show you. So it starts this morning with this downtrend. Bigger. So we start here, move, correction, move. So second correction, there the black one were the balance candles. Below that, there was my entry. I will calculate the distance to my last correction point was 0.02%, just price distance it's nothing to do with the risk. Risk is always 0.2% or higher if you know what you do. So, and then the distance 0.2%, and we reached it. Entry was here 7:37 our morning in Germany, and we hit the target 7:46, just around 10 minutes later, $100. Simple. So then it comes to a new uptrend. And as you see there, we did not make a trade. Why not? It was move, it was correction, and it was a move. So the second correction, there were my 2 balance candles. So normally I have my entry always above the balance candles because I only work with stop buy or stop sell, never with limit or market, never ever, because I believe in the trend continuation because I know the numbers on my side. So I didn't get in. Then the price fell down, fell down, and there was another change. I had also my entry there. There was no entry because the price didn't go up. So it goes down and everything, then the trend broke, by the way, and the uptrend was done. So there was no loss because it was no trend continuation. But I show you losses. We have losses also, by the way. At the same time that we are creating and developing a new downtrend. You see second trend arm here. correction was higher, around about 50%, at least higher than 38%. There was the balance candle. The distance to my stop loss was 0.03%. That's the same target, 0.303%. And we reached it over there. Just 10, 15 minutes later, we reached the target. That was the second profit this morning already in Germany, in this euro US dollar. So let's find a minus trade. Here we go. There is a minus trade. So there was the uptrend, the green one. Here is the uptrend. Move, correction, move. Then the price felt really deep in the correction. There was my first balance candle. There was my first balance candle, but the price didn't go up. So I deleted the order. So, and then that is the breaking point. That's the point 3. When the price is falling down, then the trend breaks. So at that moment, the price fell deeper. There was my next change of color. There was my entry, as you can see. But the price, it was 0.03%. The price didn't go and didn't reach 0.3%. I show you. Stop loss, entry 0.3%. You see, we didn't reach it. The price didn't go at 0.03%. So the price went down and ran directly into the stop loss. It was a minus trade. We didn't reach the target. But interestingly, the trend didn't break. They just catch the stop losses here. And now, that's cool. My mouse lost power. Just a sec. It's cool. Just a moment. Just have to change the batteries. Then I'll come back. Presentation effect, live trading. Here we go. Thanks God. So the trend didn't break. They just catch the stops there. So therefore I had to make a second entry. We have the balance candles here, the change of color. So I made an entry here again, a little bit higher, to speculating and to continue the trend. But we failed a second time. So that was the second loss in a row. It's a part of the game because as I told you, the probability of a trend continuation from trend number 2 to 3 and more is 70%. It's not 100%. We just have 70%, which means if you have 10 signals in trend number 2, then 7 times you will see the trend continuation and 3 times you won't. And the numbers prove it. Look, just 70%, 67. That's in gold a little bit less because we don't have so many signals, actually last 3-4 weeks in gold. But 61, 61, 56, 66, roundabout that numbers. So this is a hit quote you can work with. But that means roundabout from 10 signals, you get 7 profits and 3 losses. The problem is the probability, because in the probability, there is the law of coincidence, which means the order of plus and minus trades are not given. They are by chance. You just know if you have 10 signals in general, you will have 7 profits and 3 losses, but you will never know in which order they will show up. It could be that you have 1, 2, 3, 4 losses in a row, and then you have 6 profits in a row. 2 weeks ago, for example, in DAX, I had 8 losses in a row, 8 losses in a row. So now think you work with 1%, you have 8% in loss. So just with 0.2%, it's way less. And that means, but 2 days later, I was back because after 8 losses in a row, I had 10 profits in a row and I was back and I was in profit. This is what I'm talking about, the controlling of the emotions. Because as a beginner, if you are a beginner, believe me, you have 8 losses in a row. I think you stop trading or you do something else, or you are really angry and then you work with a lot of emotions. So, and this is when it comes to the point that I tend to say you cannot teach yourself in trading. So, let's see. There are the last, oh, Dow Jones. Here we go. Actually, you see, there was the other profit. Yeah. And on the other computer, I reached my target also. Yeah. Now, for example, today in Dow Jones, how cool. We had 3 profits today. So, and you can do this, for example, in every single time frame. You can, but this is just like up to 1 hourly chart. Because if you work with that rules, for example, in hourly chart, then you know there are really less signals. Let's take, for example, Australian dollar, Canadian dollar, or let's say we, yeah, so for example, you see this is July and August. So we just trade in second trend arm. And you see we had 2 losses and 1 profit. So if you do this in hourly chart, it will take a long time until you come to the profit. So even Euro US dollar, for example, in the last weeks, so in the last week, look, since beginning of July, we had just 1 loss. Or you cannot break the rules. It's math. You should never break the rules, ladies and gentlemen. Let's see, for example, gold chart. In gold, in hourly chart, we had since July, beginning of July, 1, 2, 3 profits and 1 loser. So you see, you can work with this strategy, trend following strategy, out of the second trend arm. You can really work until the hourly chart, but then you should know, then you have less signals, maybe every week, maybe 1 signal. If you are a part-time trader, then maybe this is a beside strategy you can use. But if you want to do trading for living, then maybe you should go to a lower time frame like I do in 5-minute charts. So you see, for example, in here in Australian Canadian dollar, again, next trend arm, you see 1, 2, 3, next trend arm. This is trend following. And this is what the turtle traders made in perfection. They were that successful that they have an average 70% every year. And that's why I love this trend following system. So let's, for example, index today, German index, we had also 3 profits today. We were starting in the morning here. That was the trend on number 2. The correction, it was important. Correction reached 50%. We just need 38%. So, and then there was the balance candle. There was the entry above, and we need 0.18% off to my target because that was the distance to my stop loss. That's the risk that the trend will not continue. And you see, we reached it a couple of minutes later. So we entered the chart at 8:38 and we hit the target at 9, just 20 minutes later. That was the first stop loss. You see, it's a really simple strategy. I don't need to analyze any charts. I'm not an analyst, guys. I'm a trader. I get money and I make a bunch of money with trading. And as a trader, I don't have to analyze the charts. I don't have to explain the charts. I don't have to interpret any stupid numbers. I'm a trader, and trader means buy cheap and sell expensive. This is the strategy. And to do so, you need rules. You need an approach. An approach means what to do, how, when, where, and why. Let you know at the right edge of chart all the time what to do, how, when, where, and why. Because if you cannot answer those 5 logical questions, you must act in an emotional way, and then you will lose your money. Believe me, I do trading for 25 years now, and I lost everything. I lost all money I had in the past. I lost many accounts. I lost my self-confidence. I lost my family, and almost I lost my life. But thanks God, I come back. And now I'm able to teach you a really simple strategy. Guys, it's a simple strategy. It's not easy. Trading is never easy. Trading is one of the most exhausting jobs ever because you always have to fight with yourself, to stick to the rules, to bear the losses. And you will never know how many losses you will have in a row. You will never know. You only know the numbers are on your side, but you have to keep strong to take the next signal, even you have losses, 1, 2, 3 losses in a row. You know the next every loss, and that's the good news, every loss brings you closer to the next profit. That's the good news. If you might please repeat those 5 framing principles again, please. Yeah. Um, what to do, how, when, where, and why. This I teach this my students every single day. What to do, how, when, where, and why. Think about, ladies and gentlemen, everything starts in the order book. You can see here a glance into the order book from DAX, for example. Yeah. And you see just numbers. No one cares about any lines or charts, something, or why do you do something. In the order book, you just have the numbers of buyers and sellers and the price. The beginning of every trading, ladies and gentlemen, is always numbers. So be careful with interpreting, with perceiving some things. You need a mathematical approach, and might be, could be, perhaps, or should be. It's not a mathematical approach. That's what you perceive, what you think. As long as you cannot prove your approach with numbers that you have a hit quote more than 50%, you will never become successful in trading. Never, ever. You will make money by chance, but not duplicable and not consistently. Of course not. So why we talk about those 5 questions? What to do, how, when, where, and why? Because those 5 logical questions, if you can answer those 5 logical questions, why you should act in an emotional way, as long as you know what to do. Okay, let's make an example here on the right edge of the chart. Okay, what to do? Look, there is a trade. Look, there is a trend. Move, correction, move. Now we are in a second trend arm. Look, second trend arm. So the first chance, correction higher than 50%, there is the change of color. This candle was the change of color. And that means, look, there is my entry. What to do? How? Yeah, my entry is there. I calculate the stop loss, that I know my target, and my target is there. 0.16%. My stop loss is there. So there is actually a running trade. And I calculate, I know the probability is on my side. It is a stop loss. It's a loser. It's just a loser in a row. No one cares. Because I just have a probability of around about 70% that the trend will continue. And if the trend will continue and I reach my target, then I say thank you. Yeah. But I will never know. But at that moment, you know, you can answer your questions. What to do, how, when, right now, where, exactly there, and what to do, how, when, where, and why. Why you should do it? Because it's your rules. You have to do it. The why is always you have to do it because that's the rules. Or, you know, I'm a Star Wars fan, like the Mandalorians say, that's the way. This is the way. How to do it. I don't question it. Why should I question my strategy? The strategy is given: buy cheap and sell expensive. That's a given strategy. My approach is trend following. I have my 4 rules. I need a trend. I allow to show you this again. I need my valid trend. I need my second trend arm. I need the correction, at least 38%. And then I need my balance candle or change of color. And then I know what to do, how, when, and where, and why, by the way. So the good thing is that you never, ever have to guess or have to interpret or something other stupid things. Because if you understand that trading is a game of math, it's a zero-sum game of mathematics, that you know that a strategy is given in trading and that you just need an approach. You can even use crossing moving averages as long as you make a back test or like we do a live test and you know the probability and the hit quote is on my side, then you know what to do. I don't need any indicators because I just need my trend because I know trend following is working. So, and what's about the Dow Jones actually? Yeah, now we are going back to the correction, but we hit the target already. Yeah, and the rest, I don't care about that. Yeah. Here of the recent, I needed to hear the recent outsized loss and reinforces the need for cleanup in my part of my rule set. Thank you for your comment here, guys. I have 3 minutes. Let me tell you this: don't give up. Trading is really a cool chance to make your dreams come true, but you need to understand it's not easy. It's a simple. It's simple. Trading is basically simple. Buy cheap and sell expensive. Then find your own approach that must not be trend following. There are many other approaches. You will hear many other speakers today, and everybody has its own approach. Find yours you feel comfortable with. But at the end, it's up at the right edge of the chart. At the right edge of the chart, where you don't know what's coming next, there are the 5 questions: what to do, how, when, where, and why. And if you can answer those questions, you can control your emotions. And that's the only way with logic to control the emotions. And it's the only way to become successful on purpose with trading. And as the Mandalorian says, this is the way. Thank you very much for your listening. Sorry for the slides in the beginning. It's always in my beginning. And I hope you have learned a little bit in this presentation. Thanks to David that I might be a part of this great thing. Thank you very much. And as always, have courage and be kind. And may the force of the logic be with you. See you next time. Back to David.